Hola, bienvenidos nuevamente a nuestro espacio de Hablemos de Real Estate. Hoy tenemos como invitado especial a Nick Staker de Academy Mortgage. Por esta ocasión nuestro video va a ser en inglés, porque pues Nick no habla español, pero poquito.
Poquito.
Ok, para empezar quisiera recordarles de darle like y compartir nuestra página de Facebook, Espinosa Real Estate Team, para ganarse sus $200 en el giveaway. Aquí tenemos ya el dinero. El día 31 va a ser la rifa aquí mismo, y vamos a seleccionar a los ganadores. No se olviden. Okay, done.
Okay, so we're gonna start off by asking a little bit of what some people have been worrying about. A lot of people are, scared. Are we in a recession? Is a bad recession coming up? And obviously, we can't speak as to the government's finances, but what's your opinion as far as this recession talk goes?
Yeah, so I personally don't think that we're in a recession.
Mm-hmm.
If we do go into a recession, it'll be a mild recession. I think most economists are predicting that the actions that the Fed took to increase the rate, the Fed funds rate, will actually make it less likely to go into a recession.
Mm-hmm.
So, I mean, in my personal opinion, I don't think that we're gonna see the recession type in the economy that we had in the 2007-2008 period.
Okay, and what do you think about locally in Fort Wayne for the local viewers?
Yeah, so in Fort Wayne, our market has always been pretty conservative. So the areas like in California, Phoenix, there's a lot of big metropolitan areas around the country that are going to see more of an impact than what we will in Fort Wayne. And that's because whenever the market started to appreciate, those markets appreciated significantly more than what we did in Fort Wayne. We've always had a lower amount of appreciation in real estate. So I think those markets, from what people are projecting, those markets have already started to see prices decline, where in Fort Wayne it's going to just steadily grow.
Nice, okay.
Do you think that this small recession or the market changes are going to really affect the prices of the houses?
I don't think so, not in our area. So not in Northeast Indiana, I don't think so. And again, it comes back to the amount of appreciation that we've seen year over year is low whenever you look at it from a regional standpoint versus a national standpoint.
Yeah.
So there's still a pent-up demand for home buyers, and there's low inventory. So that will continue to drive prices up. Now, if a ton of people decide to list their house all at once, then that could impact prices, right?
Yeah,
because
of
there's
course.
more supply than what there is demand. But there's such a strong demand right now for homes that it's going to continue to drive prices up steadily. Now, with the interest rates raising over the last year, about a year ago they were around 3%,
Mm-hmm.
and they went from 3 to say 7% over the period of 12 months. Right now they're around 6%, and most economists are predicting them to be in the 5s later in 2023. But when the rates went from 3 to 7, that really slowed demand because people aren't able to qualify for as much.
Yeah, we can see that. We have again buyers with the interest rates getting a little bit lower, more
Mhm.
steady, so they're more confident again to start their home buying process. So I think that is good for everybody.
I think it's great. Yeah. The biggest thing, right now, interest rates are at a 4-month low, right? When you look at it over a long period of time, interest rates are still at historic lows because the average interest rate over the last 50 years is around 8%. Right now, they're around 6%. So are they higher than where they were a year ago? Of course. But right now, interest rates are at a 4-month low. So right now is a great time to buy.
Okay, that is really really good to know. So a lot of people keeps telling everybody that they need to wait for a better time to buy. When is that better time to buy?
That's the $1 million question, isn't it? I think right now is a great time to buy. I was listening to a Dave Ramsey podcast, and he said over the next 3 years is the optimal time to buy a house. And I think it's because of where we're at in the market. And when interest rates go up, it creates less of a demand because less people want to buy a home whenever they were originally going to pay $1,200, now they're paying $1,400. Well, that price has started to come down as far as the monthly payment with those interest rates. So I think right now is a great time to buy. And I wouldn't, if you're always waiting, you're always gonna be on the sidelines, right?
Yeah.
So a lot of the time you can buy a house and pay less than what you're actually paying in rent. I do know that rates of rent over the last few years nationwide have climbed significantly.
Crazy.
So yeah, it is. So whenever you were paying, $1,100 a month in rent, and then it went up to $1,300. Now I've heard, $1,400, $1,500 for just like a 2-bedroom, 1 bath. You can own a $200,000 home for less than that.
Yeah.
So it makes sense, and especially if with the down payment assistance programs that cover the majority of your down payment and closing costs, you can buy a nice big house for less than what you're paying in rent for the minimal amount of money out of pocket.
Yep, completely agree with you. And of course, well, as you just said, if they keep waiting, they will keep throwing their money to the wastebasket all the time, right? Paying rent
Absolutely.
instead of investing in a property.
Yeah, and whenever you're paying rent, you're building zero equity.
Yeah.
You're paying off someone else's mortgage, or you're paying rent to an apartment complex. Whenever you buy your own home, a portion of the money that you pay goes towards principal to pay down your balance, so you're building equity. And then you're also getting the appreciation factor. So in that example of a $200,000 house, in over 2 years, you might pay it down to $180,000, $185,000, but that $200,000 house might be worth $230,000 or $240,000. So the difference between what you owe, the $185,000 and the $240,000, that's equity. That's money that you've earned.
That's your money.
Yeah.
Mm-hmm.
So
Yeah.
if you wanted to sell the house in 2 years, now you get $50,000 from it. Or if you rented for 2 years, you would have zero, and
Yeah.
they would keep raising the rate. Where with a mortgage, it's fixed forever.
Yeah, that is interesting.
Yeah.
So for these people that keep waiting and that maybe now are starting to open their mind to buying, what are 3 steps they could take this year to be in a home by the end of the year?
Yeah, it's a great question, Don. The first thing I would do is make sure that your credit is good.
Right,
So
credit.
you can check your credit. I always suggest that people go to the free one, which is annualcreditreport.com. That's the site that the government put out there that allows you to check all 3 of your credit bureaus from Experian, Equifax, and TransUnion. You can check them for free. It's not going to give you an actual score, but it'll show you what's on there.
Mm-hmm.
If you wanted to get an estimate of a score, you could go to, say, creditkarma.com, which is also free. I subscribe to that. That tells you what's on your credit. You can take a look at that and determine, do I have any things that I wasn't aware of? But definitely want to get your credit in line.
Mm-hmm.
The second thing that I would do is make sure that you're saving up money, because even if you qualify for a down payment assistance program, and which covers your down payment and the majority of the cost to buy a house, you're still going to want to have money for moving expenses, or if something when you move in unexpected happens. So you definitely want to work as much as possible and save. And the third thing I would do is work with a realtor that you trust. So, hey, look at that. No, honestly, you want to find somebody that's going to represent you. So when you're thinking about buying a house, and I try to explain this to people the best way possible, there's normally 2 realtors on every transaction. One represents the seller, one represents the buyer. So when I'm pre-approving somebody, I refer them to somebody who's going to represent them as the buyer to make sure that they're working on their behalf. So find somebody that you like, that you feel like has your best interests in mind, and somebody that you trust. And we're looking at 2 of them right here. There we go.
We appreciate that. Thank you.
Thank you so much. Thank you for coming to our space. Thank you for answering some questions that most of our clients have. And well, with the changes in the market, in the interest rate, and a lot of people is nervous about it.
Mm-hmm.
And so it's really good to have your knowledge and your experience here for everybody to learn. Okay, thank you.
Thanks for having me.
Thanks a lot for watching.